Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A big episode for you today. Anthony Power and I are joined by Matt Prusak. He's the president of ABTC. They just came off earnings. We're excited to talk about that along with strategy and outlook in today's video. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below what you thought of ABTC's numbers and if you're currently holding shares. With that being said, let's get into today's interview. Okay, guys, away we go. Q3 earnings with Matt Prusak, ABTC. Matt is the president, interim CFO at ABTC. First time on the channel with a dedicated interview for earnings. So we're looking very forward to this one. A great list of questions here. You guys have obviously been extremely busy getting this company up and off the ground. Matt, thank you so much for taking the time and looking forward to the discussion.
Great to be here. Thanks for having me.
Most definitely. So we've got a nice little list of questions here, some from subscribers and viewers. The first one we like to ask on an earnings style interview, you just put out your Q3 results. Can you talk to us quickly about the operational financial highlights?
Yeah, this was our first time putting out quarterly earnings since we went public. So as you may know, we went public September 3rd, rang the bell on the 16th. That was one of the fastest launch to listings in NASDAQ history, 5 months and 2 or 3 days to get this company up and running and out to the public market. So that was a tremendous achievement. This was our first ever earnings call as a public company. So the goal of this call was really to set us up, give folks a sense of what our revenues were in the past, what our performance track record has been, and what our vision is for what's to come. And it was a tremendous quarter. We doubled revenue effectively. We got into the Satoshis per share metrics. We've grown our Satoshis per share to about 432 Satoshis per share. And for those who are keeping score, Bitcoin per share for us is our most important metric. And given that Satoshis are a fraction of a Bitcoin, we tend to use the Satoshis for now. Ideally, we'd like to get to the point where it's Bitcoin per share. In terms of our performance, though, this was the first time we could really set that track record. We are running a very successful mining operation. It's been humming along, producing about 8 to 10 Bitcoin per day. We obviously have a treasury strategy as well, a $2.1 billion at the market offering, an ATM that's been able to help us amass further Bitcoin above and beyond just the mining. And this has really set us up for calls to come as to what we're able to do as a company.
That's great. We'll cover the Satoshi elements a little bit later in the podcast, but just talking about the earnings, I've got a couple of questions to place you now. So the company's in the last quarter has acquired, I think, just over 3,000 Bitcoin through both mining and disciplined, at market purchases. How do you actually, as a company, evaluate the risk-reward balance of accumulating Bitcoin during what we're seeing at the moment, the price volatility, and what sort of indicators can guide you towards how you make these purchases?
American Bitcoin views volatility as part of the game. And in fact, it's one of our advantages. We run a very disciplined mining business, so we're mining through the ups and the downs. As long as we be mindful of our energy costs, et cetera, there's no concerns there. On the treasury side, for us, it's an accumulation opportunity. You've seen this across the DATs, the digital asset treasuries. We are long-term believers in Bitcoin. The chop that you may see in the markets presents a buying opportunity. We're dollar cost averaging in a way that allows us to really take advantage of this volatility at a scale that most retail investors would be envious of, which is why we're able to really perform the way we do.
That's great. I mean, a great point, obviously, the gross margin, about 56% there. Now, to get, obviously, that margin, you scaled the mining capacity, something like, I don't know, 2.5 times in that period. What sort of operational levers or advantages are driving those margin gains, and how scalable is the mining strategy without having to increase any capital intensity?
Yes, the mining part of our business is a core component of our operations. When you think about how we approach it, it's all about operational discipline. The mining is a business where, yes, you can make Bitcoin for 50 cents on the dollar if you're very disciplined in your approach, but you really have to focus on it. So we do that a few different ways. First, we've got the energy pricing. We've got sites located in highly competitive areas or highly compelling areas from an energy perspective. We're able to go out there and then build at scale. And there are obviously further advantages to being at scale in these various markets. We're able to then basically blend down the cost of accumulation from what you've seen on the treasury side. So while we might be buying spot at one point in the day, at the same time, we're able to blend down buying our 6 to 10 or mine our 6 to 10 Bitcoin per day for the price of the energy effectively. And as you look at our metrics and you see this in our materials, the real power also is our low SG&A. So as you think about where American Bitcoin is positioned vis-a-vis our competitors, you're looking at a new miner or a new accumulator that doesn't have this legacy sort of crud or organizational bureaucracy that is built up at a few of our peers. We've solely focused our dollars at putting it to work in exahash and in Bitcoin accumulation. We have a very lean team. We tend to keep it that way. And so for us, you're going to continue to see the story of disciplined SG&A, and that is a key differentiator. As a percentage of revenue, you're seeing SG&A and the very low double digits or the single digits even. That for us is an enormously powerful component to the business. As our competitors are deciding how they're going to compete and they're going to win, a lot of them are facing very large burn rates. Right, they've got large payroll. Now they've got all sorts of kind of expenses that we've just been able to do without, and this is in part due to our asset light, operations first philosophy, and then this is also compounded by the relationship with Hut 8, and so a lot of our operational needs can actually be handled inside of our sibling company Hut 8, which really allows us to streamline the operations at American Bitcoin.
That's great. With the Gryphon Mining merger completed now, and obviously it was showing all the breakdown of the accounts there. ABTC is now trading obviously independent on the Nasdaq. And can you tell us are there any sort of early synergies or operational costs that have emerged through this process in terms of obviously taking on their assets?
Sure. The Gryphon merger was a great way for us to get to the public markets. It was a team that we knew. It was an ability for us to really rapidly get out into the marketplace. The way you would see Gryphon show up in our earnings, frankly, would be in the SG&A expenses, namely a transaction cost. Going public is not cheap. The transaction costs of the Gryphon merger were about $5 million, $5.2 million. That is where it shows up. So even as you go at home and you look at where our cost efficiencies are compared to our competitors, it's important to call out that the Gryphon transaction actually somewhat buffers or increases our SG&A. So that's not obviously something we intend to do again. We've gone public, we've completed the transaction. Gryphon was a great part of that story. It was a cost to that, but it's not a foreseeable cost as we look ahead. And this will allow us to further reinforce this asset light narrative. In terms of the Gryphon assets per se, we're not really focused on that. Gryphon really played a role in the launch and in the listing component of our business. Looking ahead, don't foresee a lot on the Gryphon side there that is largely being sunset, and the expenses related to that will also go away as well. So a great part of our origin story and a part of our incubation and our launch and our listing. Though as I look ahead into Q4 and in Q1, I don't foresee much more with Gryphon.
Now, final one on finance before I hand you back to Bryce. You delivered strong top-line growth. Your positive net income this quarter, and an adjusted EBITDA moved to, I think, $27.7 million. Can you talk about some of the key milestones investors should expect as you pursue sustainable profitability, which positions, American Bitcoin as America's Bitcoin infrastructure backbone?
The way you should think about American Bitcoin is that we're future-proofed. So the big reason behind why the EBITDA driver was so good is we have a pretty efficient fleet now. We executed the Bitmain purchase over the summer. This was a very large, about 14 exahash fleet upgrade. These are 13 joules per terahash machines, best in class. That really enabled us to position ourselves for the quarters to come and the years to come. And obviously, people are already asking about the halving. We wanted to make sure we're here for the long term. And you see that actually not just on the top line with increased revenue, but with EBITDA. You see that with a very disciplined approach to the mining, better machines, low energy prices, etc. As we look ahead to the coming quarters, we're certainly open to exploring ways to continue to grow that fleet, the path to 50 exahash, the path beyond 50 exahash. It's something we're evaluating quarter by quarter, week by week. It's going to be driven in part by where can we deliver the best returns for our investors. If we're able to do it in a way that's capital efficient, leads to more Bitcoin in the end, and we're very open to it. That being said, we're not interested in vanity metrics. If we grow exahash, it's going to be in a way that's meaningful to the shareholders. We would rather be the most efficient, lean, mean, successful guys at 25 exahash, which is roughly where we are today. If we can evolve that model and scale it to 50, which I believe we can, we frankly will do so. But we're not going to be sort of spray and pray and trying to grow nameplate.
Thank you.
That's great. I've got a couple for you here as well, Matt, on the acquisition strategy. We talk about the mining operations, the strategic purchases. Outside of those two strategies, are you guys looking at anything else to increase Satoshi per share, maybe derivatives, some type of potential option strategy, things like that?
The best way to think about our business is three layers. Layer one is the mining. As discussed, we've got a great fleet, we've got great energy prices, we've got a lean and mean team. We are set up for success in mining. Layer two is the capital market strategy. This is the ATM, debt instruments, equity instruments. You've seen some of our peers go down the preferred route. There's some debt ideas. There are all sorts of interesting things you can do as a public company that are tools that the everyday investor wouldn't have in their toolbox. This is part of the compelling narrative behind why digital asset treasuries are able to participate in the market. And again, we are not just a digital asset treasury. We are an accumulator. We've got a huge mining business. We've got a large treasury as well. But to your final point, we're really just looking to grow Satoshis per share or Bitcoin per share. And that gets to layer three. Layer three is where you get into some interesting ways, whether it's through layer twos, whether it's through Lightning Network, whether it's through some of the trading ideas you've discussed, delta neutral strategies, market strategy. Like there are interesting ideas there. We're not ready yet to really unveil them this past quarter. This quarter to us was really just a coming out and talking about the operational performance, validating layer one, getting into layer two. Not as heavy an emphasis yet on layer three. In quarters to come, you're going to see more along those lines. There are many ways we're exploring to accumulate Bitcoin above and beyond the mining. Now, the mining is a core competency of ours. It's something that differentiates us from the treasury companies. And we're really excited about that, though there are many other things we can look at as well.
Makes sense. And I want to come on to this relationship with Hut 8 in a second as well. But the final kind of DAT or treasury question for you. We've seen MNAV compression kind of across the board, real range based on the size of the company, maybe their underlying business. Would you ever consider M&A if you start to see maybe competitor companies or other digital asset treasury companies trading below MNAV?
American Bitcoin right now has been focused the past quarter on growing our business and establishing our track record. As we look ahead, there could be value creative opportunities for us in the space. There are quite a few treasury companies. There were many different strategies that folks tried when they approached the capital markets to win and become preeminent Bitcoin companies. Some of those strategies have worked, some have not worked. I'm very confident that the American Bitcoin strategy will work. So, and frankly has worked. And so for us, it's really about finding gems. If there are ways to accumulate Bitcoin on our balance sheet through M&A that are going to be net accretive to our shareholders, we would certainly explore them. At this time, we're not engaged on one. I think we're still surveying the opportunities that are out there. There are lots of discussions to be had with companies over the coming weeks and months. And at American Bitcoin, we're certainly here. We're here for the long term. So I'm excited to see what opportunities we can have in the space.
That's awesome. I've got another question just on Gryphon before we talk about the infrastructure arrangement with Hut. But on the purchase of Gryphon, I mean, I remember doing podcasts with the CEO many times, and he had this aspiration of going to like 10x. Now, obviously, that was a challenge with the capital they had there. But what they were saying in the last sort of few quarters about acquiring options on land that would be suitable with power. Was there any sort of like ability to acquire that as part of the deal, or was that sort of like smoke and mirrors to a certain extent?
Now that we're through the listing, our focus really has been on the American Bitcoin pipeline. We've got a pretty robust set of opportunities thanks to the Hut 8 team that we can explore to grow our fleet as we deem fit. The Gryphon folks had a strategy. I'm sure I'd heard their rhetoric as well. At this point, we're not really ascribing value to their approach. While it was potentially something that they wanted to put effort into over the summer or prior to the closing of the deal, for now we're really focused on the American Bitcoin side of the equation.
Okay, that's fine. In terms of that arrangement with Hut, though, how does this cost compare to like what other peer miners would utilize in building out their own facilities?
Yeah, the Hut 8 relationship is a key strength for our company. If you think about our core competencies, I came from the Hut 8 side myself. I was the chief commercial officer there. The Hut 8 team has enormous amounts of experience with Bitcoin mining, with energy development, with the infrastructure side, with the energy trading. There is a lot that goes into the day-to-day operations of running a Bitcoin mine. That being said, as a partner, we get a lot of that value without needing to rebuild that ourselves. So the relationship that we have with Hut 8 is synergistic. They get a off-taker, someone to come in and really pay money for energy and running facilities, etc. And we get a partner that wants to grow and wants to expand. The more we grow, the better they do. The more they enhance their capabilities, the better we do. It's a great relationship. It's synergistic and it's incredibly cost competitive. If you look at our SG&A again, very low this past quarter. We intend to keep it low. A lot of that can be attributed to the fact that we've been able to run lean and mean. That's something that we think we're going to be able to expand on in the coming quarters inside of American Bitcoin.
Okay.
Hey, now we've heard a lot, obviously, about Eric and Donald Trump Jr., their involvement in the company. Asher speaks very highly of how engaged, how actively participating they are in the day-to-day operations. Can you talk to us a little bit about, obviously, this is a unique competitive advantage as well, the doors that they've been able to open, the connections they've been able to make, and potentially how this has helped you guys kind of accelerate or fast track that listing process?
So Eric Trump as a co-founder has been fantastic. He's our chief strategy officer. Very involved. Don Jr. also involved as an investor and as an advisor in a lot of our discussions. As we think about where we want to go as a company, a big part of that is communicating the story. Eric has a unique ability to get out there and articulate the American Bitcoin vision to new audiences that the Bitcoin community has not previously reached, as well as articulate the story in a way that I think is more understandable to the everyday American. It's less of a story about cryptography, but more a story of decentralized trust or lack of trust, the lack of need for trust. It's a story of his personal experience being debanked, which radicalized him to get much more interested in crypto. It's an energy story. It's an American story. There's a lot of components to getting the message out there that Eric, with his audience, with his communications abilities, with his oratory, is able to reach. That is one way in which they've been incredibly helpful. Second, we really have this legitimizing factor as a brand. There are very few new miners in the space. If you wanted to build a brand new Bitcoin miner, Bitcoin accumulator, Bitcoin treasury today, you have to stand out. You really do. We had the team, we had the capital, we had the know-how, but to have a really differentiated and exciting story, it made a lot of sense for us to have this co-founder relationship, have Eric involved day to day. And he is very involved. I saw him this past week. We spent a lot of time delving into the strategy of what we want to do in the coming quarters. And that's really exciting to have and is taking us to really great places.
That's great. I was very fortunate to see Eric firsthand in Hong Kong at the Bitcoin Asia conference. So I saw him in action and representing the company really well. In terms of the recent presentation that you've put out there, you mentioned layer 3 goal of ecosystem amplification. I'm struggling to understand what that means, but can you explain so that the viewers can understand a bit more detail? And also, what revenue opportunity do you see here?
I divide ecosystem into two main buckets. Bucket one is media amplification. That's the storytelling ability that I talked about before. That's finding new investors and new people that want to take part in the American Bitcoin journey and getting out and reaching them in a way that makes sense to them and makes sense to us as a company. So that's a brand, that's an ethos, that's a media ecosystem play. The second bucket is the crypto ecosystem. That is an interesting one to me, where historically Bitcoin has somewhat been apart from the rest of crypto. It's been over here, the altcoins, that whole world has been separated. We're finally starting to see some changes in Bitcoin that are incredibly promising on this front. You've seen TradFi wanting to adopt Bitcoin in new and exciting ways. You've had Bitcoin related credit cards, you've had Bitcoin financial instruments, you've had Bitcoin denominated life insurance. So there are interesting Bitcoin related TradFi products that are things that we are currently exploring. The other angle, though, is the DeFi. So BTC Fi is a branch of DeFi, is an area I find incredibly interesting from an ecosystem perspective. These are products that harness the value and the power of Bitcoin, but do it in ways that allow us to take advantage of the programmable money thesis of DeFi, the money Lego approach that you see a lot of our peers do in the crypto space. Early days on that front, but I don't think that early. As I look at 2026, as I monitor the various layer twos being built on Bitcoin, as I monitor the various financial instruments that are being built on the blockchain or one layer over, there's a lot that can be done with Bitcoin, and there's more every quarter. So as American Bitcoin is thinking about where we want to play, that's a unique space. You've seen a lot of our peers who are doing treasury work for other currencies get into this. Some of the Solana folks, some of the Ethereum folks. As a Bitcoin fiduciary, I think it's very important for us to want to grow that ecosystem. At the end of the day, as a miner, as part of our business, we're not only wanting to use the subsidies that we get from the block rewards, you also want the transaction fees. And for those transaction fees to matter, people need to transact. For people to transact, there needs to be something of value on the network. That is something that I firmly believe American Bitcoin can build towards in the coming quarters.
Hey, one quick follow-up there. Obviously, the Trump family very involved in real estate as well, and I've heard that Eric is really so passionate about his role at ABTC and Hut 8 because of the fact it kind of bridges both of those worlds, real estate and Bitcoin or crypto. Have you guys looked at potentially like real-world asset digitization or the potential to put real estate on the blockchain, things like that to maybe progress the ecosystem?
The RWA narrative, the real world asset narrative, is really interesting to us. It isn't on Bitcoin, it's early days. You've seen folks across the crypto ecosystem evaluate ways to do this. Some of it works, some of it doesn't, but it's a directionally promising trend, just about finding the right projects on both the financial side and on the real estate side, and the right blockchain to support them. Eric is quite crypto savvy, and it's no surprise to us that Trump Organization has evaluated ways that they want to get more involved in the crypto ecosystem. As it pertains to American Bitcoin, I'm certainly open to any idea that would grow Bitcoin per share or Satoshis per share. If there are ways to use real estate or use tokenization or use real world assets that is going to create more of a Bitcoin balance sheet for me, I'm very excited by it. At the same time, since that's my North Star, it really has to find ways to lead to more accumulation. If it does, great. If it doesn't, I'm excited for it. I think it's further validation of the power of the blockchain, but it's probably not a core focus.
Now, we were lucky to have Ben Gagnon on last week to go through Bitfarms earnings. And Ben's one of probably the OGs in the space in terms of he was mining way before these public companies came to the market. We asked him a question about, where does he see the Bitcoin mining space, as we approach this halving in 2028. And it looks like not just Bitfarms, but many of the miners now focusing their attention to using the power elsewhere. What are you seeing, potential opportunities for Hut 8 as we get close to that halving date? We know the difficulty is having a dramatic effect as well on a fortnightly basis, reducing, potential production. We are seeing the global hash rate increasing somewhere around the world, maybe not all of it in North America. But what's your view on what we're seeing as we approach that next 2.5 years of mining? And how do you think we can continue to mine Bitcoin and realize a reasonable margin for these public mining companies?
First, as a mission, it's tremendously important to keep Bitcoin here in the United States. Having that hash rate localized to America is very important as Americans to ensuring that we have control over, or at least significant hash rate for an asset that millions of Americans own. There's trillions of dollars worth of Bitcoin worldwide, and a significant portion of that is owned by the American people. And so it is part and parcel that you would want to have that hash rate here in the United States as a national security or as an overarching mission. In terms of the competitiveness of the mining, we've found pockets of energy in the United States that we think are still good for mining. We will continue to do so. Obviously, with the AI narrative, with high performance computing or HPC, there are more competitors for electrons, but that's not really a problem for us. We've got a huge pipeline via Hut 8. If we want to grow, we're going to be able to grow and scale. In terms of focus, part of the advantage of the American Bitcoin carve out from Hut 8 is that I don't have to divide my focus. Our focus at American Bitcoin is solely Bitcoin, is solely Satoshis per share. I'm able to really put my attention over there. The Hut 8 side of the equation, they obviously can go and they can evaluate AI deals, hyperscaler deals, etc. Lots of promising conversations on that front as well. That divide and conquer strategy to me gives the best of both worlds. For the Hut 8 team, they've got a clear Bitcoin mandate via American Bitcoin. They're able to explore things like hyperscalers. On the American Bitcoin side, my focus can solely be hash rate, preserving the American dominance in Bitcoin, both from a hash rate perspective and from an ecosystem perspective, and creating more shareholder value for my shareholders.
Okay.
Just one more for me. I know you mentioned the exahash target up to 50 exahash. I wanted to see if you had rough timelines on that, Matt, or anything investors could kind of put on the roadmap here.
For now, we're keeping the roadmap fairly close to the chest. We have the optionality. It's an important part of our business to be nimble. So we're able to move forward with sites as we see fit, but we're also balancing that with the ability to pull capital from the markets via things like our ATM. Whatever is going to lead to the best long-term stack of Bitcoin, I'm very open to doing it. Mining is something that we, frankly, are very good at. We're going to continue to be good at. If there are ways to harness that superpower to get to 50 exahash in the near term, we can do so. If it's more prudent for us to really focus on accumulating Bitcoin via the treasury strategy, we can do that as well. Timeline, we'll see in the coming quarters as to what the most net accretive thing is at this point. We're able to negotiate deals with large mining chip producers when the time is right. So we're not opposed to growth, but we're going to do so in a very mindful way.
Now, last couple for me in terms of the Bitcoin hodl I have at the moment. So, are there any ways of putting that to work to increase value for shareholders? And secondly, what sort of, I mean, you mentioned about some of the levers for raising capital. What other levers are available to you to raise capital to follow some of the strategies that you've already articulated in the podcast?
Putting the Bitcoin to work is really interesting as a concept. We have to do so in a risk-adjusted manner. While there are many opportunities in DeFi today to get a few points of yield here or there, we are very, very conscious of counterparty risk. And we want to do things that as a fiduciary are not going to jeopardize our ability to control our Bitcoin. So while opportunities exist, we're evaluating them. We have not yet found or not yet announced a yield strategy using things like DeFi that we believe is going to be worth the risk to reward ratio. That being said, in the coming quarters, there's a lot planned. There's a lot of things in the pipeline and the ecosystem that I'm aware of that we're in discussions with. So you may see us start to explore at least ways to put coins to work in a thoughtful and risk-adjusted way. The way American Bitcoin approaches the capital markets, there's a few. There's the equity side, there's the debt side. Then there's the DeFi side. Let's focus on equity and debt. Those are treasury strategies. This plays into what we call the layer two, the capital markets and the treasury accumulation. The field is still growing. You obviously had the initial ATM. That's something that our peers had. We have one as well, the $2.1 billion vehicle we can use to raise capital for our business there. There are other instruments above and beyond just an ATM that we are exploring. Now, the order in which we sequence those is something that we're excited to announce, but we're trying to find a way to do it in a manner that's going to create the maximal amount of Bitcoin for the shareholder. And frankly, we're learning from our peers. You're seeing a lot of our competitors, I would say, but a lot of the other players in the space create new financial instruments, bring those to market, and we're seeing what is validated and what is not validated, and we're using that to inform our own strategy. So there are interesting ideas on converts, there are interesting ideas on things like preferred shares as well. Strategy itself is attacking the credit markets. That's interesting to us. We learn by doing, and we also learn by our peers doing.
Okay.
Yeah, great approach. Hey, this has been a super informative interview here. We appreciate the time. I wanted to give you a couple minutes just to close out if there's any topics maybe we haven't touched on, but really a pleasure having you here today, Matt.
Thank you. The most important thing with the American Bitcoin story is the track record, and that's something that we're building quarter by quarter. If you look at the past quarter, doubling revenue, really disciplined approach to SG&A, growing the fleet, growing the Satoshis per share, that is a taste of what's to come. That's what we want to do. It's very methodical. Our investor deck lays out the layer one, layer two, layer three. You can expect to see advances across layer one, layer two, layer three. We have the best team in the industry to do it. We've got tremendous ambitions. We have Eric Trump actively involved in the company's management and the company's growth story. And there's going to be a lot of exciting things in the future that we're going to continue to announce. And we're excited to take you all on this journey.
Hey, we're excited to keep an eye on the story and cheer you guys on from the sideline here. You're always welcome back on the channel. You guys, if you have any additional questions, comments for the team at ABTC, feel free to leave them in the section below. Hit the like button. Feel free to subscribe. We'll see you back here in our next video.